Welcome back to Next Gen Investing. It's time for FOMO, and I'm now joined again by JD Durkin, as well as Marley Kayden, host for the Schwab Network, to discuss Dell, which of course is the subject of our FOMO discussion. Marley, good afternoon to you. Thanks for joining us. Let's talk some Dell. A couple positive analyst moves here today, getting the stock on the move.
Yeah, good afternoon to you too, Alex. Yes, three positive analyst notes, all with price target hikes for Dell. BofA, I think, probably having the one that said the most. They upped the price target to 165 from 155, kept their buy rating. But the big headline out of this was that BofA thinks that Dell's earnings could double by 2030. So a pretty substantial move that would indicate for them. They're saying that IT hardware companies like Dell will continue to benefit from the growth of enterprise and sovereign AI over the next decade. Because of that, they've also raised fiscal year 26 revenue estimates up to $106.8 billion from $105. EPS forecasts up to $9.49 from $9.40. They're also saying the company's likely to generate over 12% revenue growth over the next 5 years versus 2% over the prior 5. JP Morgan also feeling bullish here. They upped their price target to 145 from 125, kept an overweight rating on the shares. They adjusted price targets in hardware and networking, saying that it expects upside in the second half of 25 from robust cloud spending. They did have a however in there. They have an underlying end market drivers that customer verticals remain a watch point for them as they exhibit more sensitivity to the macro environment. So they did have a flag in theirs. Goldman Sachs was positive, though, raised their price target to 140 from 130, maintained their buy rating. And they specifically cited that Dell's AI lab is undergoing some infrastructure changes that they felt it needed to adapt to the latest needs, and said it, quote, indicates the team's agility in response to the rapid pace of innovation in AI. They also cited their AI server orders of $12.1 billion in fiscal Q1, but more importantly, its backlog of $14.4 billion. So they're saying they continue to grow their pipeline, illustrating the growing demands for AI system, and that is why they have the higher price target, Alex.
Hey Marley, it's JD here in New York. It's interesting when you watch how the stock has been trading here over the summer. I would argue it's been somewhat range bound, not a very narrow range overall, but sort of 108, 109 on the low side, up to about 125 on the high side. Today's price action really kind of busting out of that range for the first time in a long time. And I wonder, Marley, when you look at these upgrades, what signal do you best sense that these sort of upgrades actually send to the market? And what does it say about where the company is positioned right now?
Well, I think, JD, that BofA commentary was a big driver here, saying that they could double their earnings by 2030. That's a huge statement for a company like Dell that's already such a big player. You know, they're up more than 6% on the day. They have been somewhat range bound, but I mean, if you look at them, not just in the last couple of weeks, the last month or so, where they are up 12%, 6 months, they're up 20%. So in a wider range there, but, having a strong year overall, though, for the year on the whole, not as big a move. They're within that 5% range. So, it's interesting to see such a response, but my assumption is the differentiation between all of the analyst notes, not all citing the same reason for the increase, likely led to the bigger pop we're seeing today. I think you tend to see less when they all cite the same reason. These are three distinctly different reasons, all for an increase.
Marley Kayden, appreciate the update. What a move for Dell, as just another example of one of these legacy names that has found a niche and has transitioned very, very nicely here in this AI age. Marley Kayden.